Well, some of you may know that I'm also a lender, in addition to being a real estate broker. I recently switched my license over to NEXA, and NEXA is the largest mortgage company in the country at this point, with over 5,000 loan officers. They have what's known as NEXA Fest. It's an annual festival. They get together, and it's right here in Dallas this year. And I'll be there this afternoon. But yesterday I went there, and I spent a lot of time talking to their vendors, particularly about what's known as a DSCR loan. Now, a DSCR loan is what's known as a debt coverage service ratio loan. This is specifically for investors. Instead of having to worry about whether or not your current income will cover the mortgage, trying to get rental income off of that, that's a different type of program. This one basically says, what is your ratio going to be? Are you going to be at 1.2, meaning are you going to have $1,200 worth of income for $1,000 worth of debt service? That's the best case scenario. That or better gets you the best rates, which actually are in mid-sevens. The worst case scenario is 0.75. That's a negative cash flow, at least in terms of debt service. Obviously, there's other expenses, taxes, insurance, maintenance, etc. Some HOA dues. In this particular case, you would have $1,000 worth of debt service and $750 worth of income. Obviously, that is going to be a worse situation in terms of interest rates, and you're going to have more money down, etc. Now, they'll do loans for 1 to 4 unit, 5 to 8 unit, and some will even do up to 20 unit. There are commercial lenders that'll probably do more than that. The ones that I talk to here are basically residential lenders that do some commercial. There are some commercial or private equity firms that will do more than 20. But the ones that I spoke to at this particular event will do up to 20. And the great thing about NEXA is not only can I do mortgages, but I can do hard money. I can do another video on that. I can do commercial construction. In fact, I've got possibility of getting a loan on that local here for somebody who's going to build a 10,000 square foot unit. I'll know about that in a couple of months. What happens is they have so many people tied into the system that I don't have to be an expert on every type of different loan. I've got experts that I can contact and refer the loan to them. I'm involved in it, but the other person would be handling it. I could be a main point of contact. Going back to the DSCR program, most of them will do a loan for each individual home. That's the norm. But I did find at least one company that will do what's known as a blanket or portfolio loan, which means that they will do one loan for a group of houses. Let's say, for example, a builder was building a bunch of homes. They haven't been able to sell them. They will be willing to sell these homes en masse to somebody to buy them to get them off their books quickly, because just like cars that are at a car dealer, they're paying flooring on these. They want to get those cars off the lot as quick as possible. Same thing. These builders want to get these homes off their books as quickly as possible. And when homes aren't selling, as what's happening right now, then they are willing to sell to investors. And I know of a few builders that are willing to do that. Call me if you're interested. Meanwhile, what you can do is you can do a portfolio loan and buy a bunch of these homes all in one, all one loan. The rate's probably not going to be as good, but it's still pretty darn good, and it makes it a whole lot easier, and you only have one closing cost. In terms of vacant homes, they allow that. Typically, they want those to be rented within 90 days. I met one lender. I'm assuming they've got great rates because they're a big stickler for this 90-day time period. If at 91 days you don't have it rented out, they could start foreclosure proceedings. And that's a private equity firm. I'm assuming they've got great rates in exchange for being very strict about their rules. We'd have to see and talk to them. They even have a first-time home buyer program. It's not what you think. This is somebody who is currently renting a home, has never bought a rental property before, but they want to buy a rental property instead of buying a house for themselves. They call this a first-time home buyer program. For example, let's say a person is renting the home that they live in. They don't own a property, but they want to buy a rental. And they have saved up 20% to put down for this rental. Let's say that the rental is $200,000. They put down $40,000. They can get a DSCR loan on this first rental property, even though they've never owned their own property before. It's kind of an interesting way of getting into being an investor. Typically, you'll need 20% down, I've seen it where it goes as low as 15% down. When you get into more expensive properties, lower credit, the ratio of rent to debt service is low, such as 0.75, then you might go up to 40%. I don't want to give you all the different rules because each company's got their own set of rules, different tiers, etc. But I wanted to introduce you to the program in case you've not heard of it before. Some of you have heard of it before, think this is rather basic, but I wanted to give you an introductory lesson about how these programs work.